Good evening and welcome back to Be Rich. Today, my good friend and nephew Sashwath is here, and he wants to discuss about the recent fall in prices of commodities and what it means, and how things are going to look up, and why has this crash happened, and what it portends. And let's get dive right into it. And I am looking forward to his questions, Shashwath.
Right. So we already know the background to the current scenario with the Ukraine war and rising commodity prices before, but now they've crashed suddenly. I'll get to that. But the first question is, why are stocks rising? That is at least temporarily because there was a lull, but then now it's rising again. And when during the recent Fed meeting, in the minutes of the meeting, they had shown a staunch commitment towards raising their interest rates,
Okay.
regardless of the economic indicators.
I think some commentator wrote, they believe that a recession is coming, and they believe because a recession is coming. And so far from 2000 to 2020, every time there's been a problem, the Federal Reserve has been very liberal in providing with a punch bowl
Right.
filled with liquor. This generation has forgotten that the Fed can tighten and tighten like what Paul Volcker did. And they believe honestly that none of the Fed chiefs after Volcker has the spine to tighten like them.
Yeah.
And at the first sign of recession, the Fed will back off and allow inflation to remain where it is. So the market rising is an anticipated celebration of the fact that there is a recession and interest rates will not go up beyond
Celebration that there's a recession.
So that is how why if actually recession is deep, then you are going to have earnings dip.
Earnings declines, yeah.
If you have earnings decline, EPS is going to decline.
Companies won't be able to pay debt.
There'll be a lot of bankruptcies. So stocks should come down.
Right.
Most of these technology stocks
Yeah.
are intoxicated on free cash flow. They believe that the Fed will restore free cash flow. Right now, the Fed is doing two things. One is shrinking its balance sheet and at the same time increasing interest rates. And therefore, they believe, irrespective of whether inflation comes to 2% or not, there is going to be a deep recession, and under pressure, Fed will reverse
So
and not go the full Monty.
So I have a question regarding, or a sub question rather. So you had said that the Fed is tackling inflation on two accounts. One, shrinking their balance sheet, increasing the interest rates. So do you think this is too much of a response to the current inflation they're having?
See, at the end of the day, inflation has to be crushed.
Yeah.
Okay. Now, inflation is at 8.6.
Yeah.
It's never happened in the history of the Fed from 1913 till today that they have managed to bring down inflation without making sure that the Fed rate is higher than the inflation rate. At this point of time, the Fed is saying they will take it to 3.93, not even 4. That means if they are going to stop at 4 and start to cut, this will be the first time when inflation will come back to 2 without interest rates crossing the
Without positive real rates.
I do not think that is going to happen. I believe that it has all the evidence that is there that labor is asking for a higher share of money from the people.
Yeah.
So if you look at the United Airlines settlement, the Eastern Airlines settlement, and the SAS, the Scandinavian Airlines has filed for bankruptcy. All this shows
because of wage
issues.
Okay.
That people are going to not settle for lesser wages.
So sticky wages.
Yeah, sticky higher wage inflation. Once you have wage inflation, falling commodity prices does not matter.
It doesn't matter. So that brings me to my next point. So recently the 10-year yield has gotten lower than the 2-year yield. So that's an inverted yield curve, which most economists say is predicting a recession.
Yes, what it says is that short-term interest rates are higher than long-term interest rates. Normally, if you are willing to accept payments over a longer time, that means you are sacrificing your labor and capital over longer time.
Yeah.
Money is nothing but stored labor.
Yeah.
So we are willing to. Yeah, Adam Smith. So if you are actually going to sacrifice that for a longer time, you should get a higher return. So the market believes that people in the long term interest rates will come down, and in the short term interest rates are higher. This in the past has always shown a recession, And the space, in Jerome Powell's words, the space for a soft landing has narrowed. I don't think there is going to be a narrow landing. There is going to be a very hard landing.
And you think it's a necessary landing?
You need to necessary and you have to deepen the pain, because unless Fed brings inflation to 2%, people will not have the credibility of the Fed will be destroyed forever. So irrespective of the pain,
So this is a do or die situation.
do or die situation, unless inflation slides to 2%,
The regular.
the Fed should continue to increase interest rates.
Okay. Now we get to the interesting part. Oil prices have now returned almost within spitting distance to pre-war levels, and copper is at an 18-month low. And is this because of an increase in supply, or is this just a paper movement? What do you think about it?
See, the spot prices of crude are higher than the future prices. Again, what is future? That is, you want delivery 30 days from now. But your spot prices are higher because there's strife in Norway and the supply bottlenecks are there.
So spot prices define current prices.
Current prices.
Yeah.
But current prices are higher. Future delivery prices are lower.
Right. Then
Yeah.
that makes the case for futures, right?
That is the futures. So the futures market is predicting that there will be less demand
Okay.
and more oil.
So they're taking a bet saying that even though prices are currently higher, they are going to get lower. So it's out of the money.
It's out of the money. So this also indicates there is a recession. Lower copper price indicates lower industrial activity and lower demand. Therefore, I expect a deep recession in the developed world.
And is the current lower prices available on oil or crude oil and copper good news or bad news, or is it just news to look out for?
At this time, it is only news
Okay.
because current prices of crude are much higher.
Spot prices.
Spot prices. I have not looked at the Brent or the Indian basket.
Yeah.
The basket which has really dropped is the Western Intermediate oil basket, which is oil which is drilled from Texas. So basically, this is the next inverted yield curve, and the cracking crude prices along with copper at 18-month low indicate a very strong possibility of recession.
So it's a prophecy of sorts.
It's an indicator of sorts.
Indicator. Okay. So there's another interesting fact which I think you'll find interesting is that 1,53,660 agricultural future contracts have been liquidated. That is, these long positions have been sold off, and this is the second highest they've ever seen in such a short period.
See, what they thought is that wheat supplies will dwindle, and two major exporters, Russia and Ukraine, were out of the market. The feeling was that there will be no wheat in the market, but now the market expects that in the future wheat supplies will be more than what it is today, and therefore the long positions have been liquidated. Another thing, these long positions are financial contracts.
True.
So which requires cost of capital. The cost for lowest risk capital is going up. So that is why this clearly shows money is being liquidated from these futures market and is now going back into bills, treasury bills. The US 10-year yield has come down from 3.5 to 2.97. This means more money is moving into yields, into the gilts. Where is this money is coming is commodity positions in which people are already very profitable are being liquidated and the money is moving into US Treasury.
That's actually a brilliant connection, because so what you're basically saying is that because interest rates are being raised, a lot of these commodity positions are held on leverage and their cost of capital is higher. So it makes more sense for some of them to liquidate their positions and sit in US treasuries.
Exactly.
Great connection. And so that leads me to my next question, which is a conceptual question of sorts. What is backwardation in contracts, and what does it mean for commodity prices, and why is there a disparity between paper and physical markets?
There is always one thing is paper markets is that I want a future delivery.
Right.
That means I am paying for something today. I'll buy it to you at that time. I'm buying it on margin and then I'll have to settle.
Right.
So when capital is being moved 30 days from now, there has to be a cost for carrying it.
Of course.
That is why there is a cost of capital.
Yeah.
So that is why futures prices are always greater than spot prices. In agricultural commodities and other commodity markets, if spot prices are very high and future prices are low, it indicates that demand is collapsing and there is a recession around the corner. That's what is saying.
So backwardation is basically when future prices are lower than spot
Yeah,
prices.
which is that defies economics.
Yeah.
Because that means cost of carry is negative.
Right. Okay. And why are petrol prices and diesel prices so persistent when oil prices have come down?
In America, it has dropped from $5 to $4.80 a gallon. In countries like India, it is usurious taxation both at the center and the state.
So it's more of a fiscal thing.
More of the fiscal thing.
Okay. And I'll finally come down to something interesting, which I think you'll find pretty amusing to talk about. So first, you had written an article on the RBI trilemma in the Federal, and so I want you to give your take on the Bank of Japan holding on persistently against rising rates and reducing their rates at the same time, while opening up themselves to a threat of a weaker yen. Is this a good decision? Is this genius? Because their exports and their exports will increase, one, and second, they're trying to stimulate.
Yeah, Japan has been in a stagflation for nearly 40 years.
Yeah.
In the sense that companies are now making record profits, are not willing to pay labor their fair share.
Higher wages.
And they are not willing to pay higher wages because they've had stagnation for so many years.
Since the last decade.
That is the 90s.
Yeah.
Now what has happened is the employees have thrown in the towel and not willing to ask for higher share of the...
They've thrown in the towel.
They have thrown in the towel. They got used to it.
Okay.
So you don't have stagnant wages. So the Bank of Japan, Kuruda, feels that there is no threat of inflation coming in, and a bit of inflation is good because it will get the labor moving and will get the economy moving in the long term. I think the yen will continue to dip till the point recession comes. When recession begins to bite, there will be flight to safety and the yen will appreciate again. That is why I recommended last week that if you can buy yen.
Right. And so if the Bank of Japan, as they have made it clear, they're saying that they're going to continue with their buying of Japanese bonds, which also opens up the currency to depreciation in the short term, then does it make sense right now to borrow in yen where yields are pegged and then invest in US securities where yields are going up? And the US dollar is also appreciating.
So it makes eminent sense.
So this is a Soros type deal, at least in the short run.
Yes, it's a Soros type deal in the very short term. Borrow in yen with no recourse and send it. Just lend it to the American Treasury Department.
So why are Japanese banks not doing this?
Are you sure they're not doing it?
Oh, you think they've already started?
It will come. We always come to know
a few.
Yeah, in hindsight.
There's a time gap.
There's a time gap.
And what does this mean? So I'm going to connect it to a topic which we had discussed long back. The Buffett deal in Japan.
This is similar to what you're asking.
So this is windfall.
This is a real windfall for people who have very high credit rating.
Okay, and that's about it.
We had a interesting conversation on this. Thank you.
Thank you.
Thank you for watching Be Rich. If you like this video, kindly hit the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.